A quiet Thanksgiving, unraveling the Forex market's secrets. Markets take a breather on Thanksgiving Day, but the story behind the scenes is far from dull. As we delve into the world of Forex on this quiet Thursday, November 27th, let's uncover the key insights that might just spark some lively discussions. Economic calendar, Europe's turn to shine. While the US enjoys its Thanksgiving holiday, Europe steps into the spotlight with its economic calendar. Business and consumer sentiment data will be released, offering a glimpse into the region's economic health. Additionally, the European Central Bank, ECB, will publish the accounts of its October policy meeting, providing valuable insights for traders and investors. US dollar's weekly performance, a mixed bag. The US dollar, USD, had an eventful week, with its value fluctuating against major currencies. The table below illustrates the percentage changes. USD, EUR, GBP, JPY, CAD, AUD, NZD, CHF. Minus 0.61%, minus 0.98%, minus 0.20%, minus 0.46%, minus 1.04%, minus 1.80%, minus 0.48%. The USD struggled the most against the New Zealand dollar, NZD, losing 1.8%. However, it managed to hold its ground against the euro, and the British pound, GBP, with relatively smaller losses. Heat map, visualizing currency movements. The heat map provides a visual representation of currency movements. For instance, if we compare the USD to the Japanese yen, JPY, we see a minus 0.46% change, indicating a slight decline in the USD's value relative to the JPY. US macroeconomic data, a mixed bag. The US released upbeat macroeconomic data, including a decrease in initial jobless claims and a rise in durable goods orders. These positive indicators helped the USD maintain its position in the early American session on Wednesday. However, the overall market sentiment remained risk-positive, making it challenging for the USD to gain significant strength. UK budget announcements, tax hikes and more. UK Finance Minister Rachel Reeves announced a 2% increase in tax rates on savings, dividends, and property income. Additionally, they plan to extend the freeze on income tax thresholds and raise alcohol duties in line with inflation. These measures had an impact on the pound sterling to US dollar pair, which rose by about 0.6% on Wednesday. Euro to US dollar, testing new levels. After strong gains, Euro to US dollar tested the 1.1610 level in the Asian session on Thursday. The pair remained relatively stable as the European session began, fluctuating below 1.1600. US dollar to Japanese yen, recovering from Tuesday's decline. US dollar to Japanese yen benefited from the improved risk mood and registered modest gains midweek. However, the pair retreated early on Thursday, declining towards 156.00. Gold, holding steady. Gold prices held steady above $4,150, rising about 0.8% on Wednesday. Growing expectations of a Federal Reserve rate cut in December have kept XAU/USD bullish in the near term. Risk sentiment, understanding the jargon. In the financial world, the terms risk-on and risk-off are commonly used to describe investors' risk appetite. In a risk-on market, investors are optimistic and willing to take on riskier assets. Conversely, a risk-off market sees investors playing it safe, opting for less risky assets with more certain returns. Risk-on versus risk-off, the impact on markets. During risk-on periods, stock markets tend to rise, most commodities, except gold, gain value, and the currencies of commodity exporting nations strengthen. Cryptocurrencies also see an uptick. In contrast, risk-off markets favor bonds, especially major government bonds, gold, and safe haven currencies like the Japanese yen, Swiss franc, and US dollar. Currency trends, risk on and risk off. Currencies like the Australian dollar, AUD, Canadian dollar, CAD, New Zealand dollar, NZD, and minor FX like the ruble, RUB, and South African rand, ZAR, tend to rise in risk-on markets. This is due to their heavy reliance on commodity exports for growth. Conversely, the US dollar, USD, Japanese yen, JPY, and Swiss franc, CHF, are major currencies that rise during risk-off periods. The USD status as the world's reserve currency and the demand for US government debt in times of crisis contribute to its strength. And this is the part most people miss. The impact of risk sentiment on currency movements is a complex and fascinating topic. It's a delicate balance between investor confidence and economic fundamentals. As we navigate these markets, it's crucial to stay informed and consider the bigger picture. So, what's your take on the current risk sentiment? Are we in a risk-on or risk-off phase, and how might that impact your trading strategies? Feel free to share your thoughts in the comments below.